welcome back, and joining us for a look at the day's markets action is Imtiaz Suliman from Sentio Capital. Thank you so much for your time, Imtiaz. We are seeing an extension of the rally that we saw last week on the JSE and actually just in the global markets in general. Is there nothing that's testing market bullishness at this point?
Yeah, thanks, Anati. I think what we're seeing is that the numbers coming out of the US in particular are quite strong. So inflation is on a downward trend. Employment levels are still quite high, and the unemployment level hasn't been ticking up as meaningfully as one would have expected. And also the impact of the higher interest rates, especially out of the US, is not having a major effect just yet on both households and the corporate sector. So growth is starting to essentially broaden out. We're seeing, earnings growth come out of those companies outside of the Magnificent Seven. So almost a broadening out of growth. And we've seen other markets also do quite well. So, Japan in particular has been doing well. And we're starting to see Europe also starting to pick up. So overall, there seems to be that broadening out of growth.
All right. Well, talking about growth, we saw massive growth on Astral Foods in the interim period. Of course, that coming from a low base as it had a lot of headwinds in the previous financial year. Would you say that this is purely a story of recovery and nothing more? Of course, because we even saw, for example, even though they did manage to increase selling prices, their margins are still quite paper thin.
Yeah, I think Astral is a very cyclical company. Last year was a major confluence of issues that had an impact on their share price. So you had higher maize prices, you had load shedding, you had the water issues, and also the bird avian flu issues as well. So I think a lot of issues in the prior year. What we saw now is some normalization. So those big load shedding costs didn't recur, which had a major impact in terms of their earnings. And some of the feed costs also started to come down. They managed to pass through some price increases and try and recover some of that cost pressures that we've seen. And although it was, quite a muted price increase, it did bring some relief for the company. So, revenue was up 4%, but earnings are up a massive 440%. And if this continues, we do see some price increases and maize prices stable or start to decline, that would bode well for Astral's margins going forward as well.
All right. Well, let's get into healthcare. Netcare being, of course, one of the stocks that has seen subdued trading and quite subdued sentiment because of the NHI that's been signed into law. But besides all of that, looking at the financials that it came out with today, showing growth from the top to the bottom line, but saying that seasonality was something that limited those gains there. But I mean, would you say that this was a decent set of numbers, healthy set of numbers?
Yeah, I think overall I would characterize it as steady. There was some growth in terms of revenue. What was a bit better was the margin performance, and this comes as a result of Netcare initiating their digitalization project, and that's starting to bear fruit because they're starting to see cost savings come out of that project. They did also decline some of the network deals by the funders, the big medical aids, and that comes at a lower margin. So that helped Netcare in some way. Although we're seeing patient volumes still quite muted, especially in the acute to the hospital side, whilst the mental health facilities are doing much better. You should see some recovery just in terms of volumes and revenue in the second half. But I think overall, it's all going to be about trying to manage that cost further. And the same with Astral, as load shedding was a bit better, they did see some cost savings come through, and you'll see that margin also trend upwards. They do have a very strong balance sheet, and that allowed them to do some buybacks, pay a decent dividend. And I think the second half will be a bit better than what we saw in this first half.
All right. Well, at numbers that I was actually quite surprised by because of what we've seen from competitor Spur is Famous Brands. They released year-end results. reporting growth in its revenue of almost double digits, but then you did not see that growth filtering through to the bottom line, as you saw headline earnings per share declining by 5%. And of course, as I mentioned, Spur has been coming out with glittering numbers. So for me, it was quite a surprise to see this pressure on the bottom line for famous brands. What can we attribute that to?
Yeah, I think, if you look at it, revenue was up 8%. There was a once-off in this number, whereby last year they had a dividend from the GBK liquidation, which was the UK operation. So that was in the base. If you strip that out, operating profit would have been up around 3% rather than being down. But if you look at it overall, they had to give their franchisees some relief with regards to load shedding. So royalties that they charged to the franchisees were lower. And again, if load shedding stays lower for longer, and at levels that are below stage 2, that would be positive for the likes of famous brands.
Okay.
But it's also a bit of a tricky one, because they mentioned that people were eating more at home because we had the Rugby World Cup. And when you do have less load shedding, there's actually also people eating at home and they're not going out to eat.
True.
Whilst you have load shedding, people are going out for more takeaways.
It's actually quite interesting because, when you have less money and there's no load shedding, you'd rather stay at home and cook. Well, let's take a look at your stock pick for today, Imtiaz. What are you picking?
Yeah, I'm going for Nedbank. I think the whole banking sector in South Africa is relatively cheap. But what we're seeing now is a normalization in the credit loss ratios. Nedbank overall is targeting a return on equity of 17%. And you should see them get quite close to that number in 2025, as you see the interest margins, starting to normalize, but also some relief to the consumer as we see interest rate cuts, probably towards the end of this year. They got some excess capital, so I think you could see some return to shareholders over and above the normal dividend, which would bode well for them. And then you've got a recovery in the African operations, which is the ETI operation that they have. So overall, it's trading on a 6 forward PE with an 8% dividend yield, and I think that's quite attractive.
All right. Well, thank you so much for your time and giving us analysis on what has been moving investors' money today, Imtiaz. That was Imtiaz Suliman from Sentio Capital.